Good evening. You're watching In Your Interest. I am Shweta Kothari. The top story we're tracking at this hour, the Adani Hindenburg Saga, the high-profile story that broke in January of 2023, continues to evolve with new developments today. At the center of the latest allegation is the freezing of 6 Swiss bank accounts held by a Taiwanese resident as a part of money laundering probe, suspecting he may be a frontman for Adani Group. Now, what are the latest allegations? According to Hindenburg, the Swiss authorities have reportedly frozen assets worth $310 million tied to the Adani Group. Hindenburg quoted the Swiss media outlet Gotham City in its report, stating that a ruling by Federal Criminal Court or FCC shows that Geneva is investigating alleged wrongdoing for more than 310 USD belonging allegedly to Chang Chung Ling, which have now been frozen. The Swiss investigators suspect that associate Chang Chung Ling is not the ultimate beneficiary owner of the company under investigation, but a mere frontman for billionaire Gautam Adani, who has sequestered money in at least 5 Swiss banks over the last 3 years. Now, these funds are linked to allegations of financial misconduct, including money laundering activities. According to reports, these accounts were flagged as a part of a larger investigation into potential violation of international financing regulations. The freeze follows findings that Adani Group may have used these accounts to channel illicit funds and bypass regulatory frameworks. Now, Adani Group has denied these claims, and Swiss court as well as the Swiss have not mentioned the group company or named them, nor have they received. The Adani Group have not received any request for clarification. Well, that's the statement coming out of Adani Group as of this morning. The name, however, Chang Chung Ling, had first surfaced in Hindenburg report back in January of 2023. The report accused the Adani Group of, and I quote, brazen stock price manipulation as well as accounting fraud. According to Hindenburg, Adani used shell companies in tax havens like Mauritius, Cyprus to inflate their share prices of all listed entities, misleading investors in India and concealing debt. Now, the Adani Group vehemently denied these accusations, dismissing the report as malicious attack on India's economic growth. However, the damning report earlier led to wiping away of $150 billion in market value of the listed firms of Adani conglomerate in the following weeks subsequent to January of 2023. Following the Hindenburg report, Indian regulatory bodies, including Securities Exchange Board of India, the SEBI, launched investigations into Adani Group's financial practices. The Supreme Court of India also constituted a panel to investigate the allegations, which led to more detailed inquiries into Adani's offshore dealings. In July of 2024, the Supreme Court, in its final ruling, declined to order a CBI or an SIT probe in the matter. In its judgment, the Apex Court said that market regulator SEBI was conducting a comprehensive investigation into these allegations, and its conduct inspires confidence. SEBI in turn said that it has completed its investigation in 22 out of 24 matters where the allegations had been leveled against Adani Group. But the SEBI, on its part, did not share any details at all. The latest allegations, if one were to go by, the Adani Hindenburg saga is far from over. The latest freeze on Swiss accounts allegedly linked to Adani raises more questions on the group. As investigation in Switzerland continue, the outcome could have lasting effect, not just on the Adani Group, but on how corporate governance and financial regulations are enforced in India versus globally.